Did you know that with just 10,000 Kenya shillings, you can now own a share in every company listed in the Nairobi Securities Exchange? In August 2025, the NSE revised its rules to allow investors to buy as little as one share from the previous minimum of 100 shares. The previous minimum had made it too costly for many Kenyans to invest. In this video, we break down how much it would cost to buy one share from each listed company under the new rule and compare it to what you would have needed under the old rule. Our analysis is based on market prices as of August 20th, 2025. But remember, prices on the NSE fluctuate constantly. As of 20th August, there were 67 listed companies, with Mumias Sugar being the cheapest at 0.27 shillings, while the Absa New Gold ETF was the most expensive, with one share going for 4,050 shillings. Under the new law, a trader needs 10,260 shillings to own each share of every company listed on the NSE. However, under the old rule, an investor would have needed 1.026 million Kenya shillings to invest in all the listed shares since the minimum was 100. What if you are interested in buying sector shares such as the banking and manufacturing sectors? Here is how much you would need to start. First, let's start with the banking sector. So under the banking sector, there are 11 banks, including Equity, KCB, Absa, and Standard Chartered. Buying one share in each would have cost 920.1 shillings in August, which is an up of 20.9% since January, and that means that an investment of 100,000 in that sector at the start of the year would now be worth 120,900 shillings. Let's also look at the manufacturing sector. So this sector has firms like EABL, PAT, Kabacid, and Unga. Combined, it would have cost 812.21 shillings in August, which has seen an up of 16.94% since January, and an investment of 100,000 invested in January would now be worth 116,940 shillings. Then we have the energy and petroleum sector, which has companies like KenGen, KPLC, Total Energies, whose individual shares cost 59.4 shillings in August, which is an up of 24.31% since January, and an investment of 100,000 made in January would now be worth 124,310 shillings. Let's look at the insurance sector. So this was the strongest performer. It has insurers companies such as Britam, CIC, Jubilee, and Sanlam combined would have cost 326.25 shillings in August. This sector has seen a growth of 60.13% since January, and that means that an investment of 100,000 made in January would now be worth 160,130 shillings. Then lastly, we have the agriculture sector with firms such as Kakuzi, Sasini, and Williamson Tea. The total cost of one share from each company would have costed 1,325.15 shillings in August, and it has seen a growth of 6.43%, and that means 100,000 invested in January would now be worth 106,430 shillings. Some of the things to consider before investing in the NSE would be: number one, to do your research. It is important that before you invest, you understand the company business, management, and finances so that you can make better and informed decisions. Secondly, is to check valuation. Price alone does not tell the full story. Use tools like the PE ratio to see whether a stock is fairly valued. Also, it's important to consider liquidity. This is because some stocks are hard to sell quickly. Make sure you can access your money when needed. Also, you should think long term. Stock prices fluctuate, so patience is key to grow wealth over time. And lastly is to diversify. Spread your investments across companies and sectors to reduce risks and increase steady returns. For these and more investment tips, we have a partnership with Lua, which is a free AI assistant on WhatsApp that can help you with your budgeting, planning your meals, generating images, as well as summarizing long documents for you. Click the link on our bio to try out Lua today.